Welcome. I would like to welcome everyone to our Queens Chamber Health and Wellness Committee and Banking and Law Committee meeting. This meeting is Reimagine Your Business, Financial Wellness in a Post-COVID World. Your business has survived this long. Now find out ways to get to the next level. Hear best practices and expert feedback on a wide array of important topics. So today, I'm going to introduce to you our panel members. I know some of these people personally. They have a lot of expertise in their area. So first, I would like to introduce Adam Gattel. He is a principal at Jackson Lewis PC. Adam, please tell a little bit about what you do. Thanks.
Sure, thank you. Thank you, Bert. Thank you to the Queens Chamber for inviting me to do this. I'm a employment attorney, primarily management side, which means that we represent employers, not necessarily employees, in all aspects of employment law. Primarily, I'm a litigator, so I see a lot of things that happen once they become a problem after a current or former employee brings a lawsuit, having anything to do with discrimination, harassment, retaliation, workplace problems, having to do with illness. That's what we do. So I'm here today, hopefully, to give you some information that can help you in your business. Obviously, anything I discuss is not legal advice. That's the little disclaimer. That's a case-by-case situation that we'd have to talk about directly. But these are general concepts that I'm going to talk about today.
Thank you, Adam. Next, we have James Vinier, Vice President at Pursuit Lending. James?
Sure. So good afternoon. First of all, thank you, Bert, for setting this up, and thanks to the Chamber as always. So my name is Jimvina. I am a lender at Pursuit. We are a New York State chartered bank. However, we're not a deposit institution. We focus primarily on administering the SBA 7A and 504 loan programs to help small businesses access capital that may be deemed unbankable for one reason or another.
Thanks, James. And last, Prableen Burke, Director at Citron and Cooperman. Prableen?
Thank you, Bert. Afternoon, everybody. Thank you to Bert and the Chamber for inviting me to speak this afternoon. Prableen Burke here. I'm a CPA and a director at Citron Cooperman. Citron Cooperman, we are a top 25 accounting and advisory firm. I work in the firm's advisory and assurance practice. I deal primarily with healthcare entities, and they include a wide range of health systems, physician practices, outpatient facilities, such as ambulatory surgery centers, dialysis centers. And I also handle a handful of financial services clients, from broker-dealers to hedge funds to private equity funds. And happy to be here this afternoon to share some light on some relevant topics.
Thanks, Prableen. And just again, my name is Burke Larch. I am the CEO of East Central Medical Management. We are a revenue cycle management firm, originally from Queens and now based out of New Hyde Park. I am also the co-chair of the Health and Wellness Committee and also on the board of directors for the Chamber of Commerce. So we'd like to thank Tom Gretsch and the Chamber for allowing us to do this, and Jeff for helping us put this together, from Jeff from the Chamber. So with that being said, just would like to talk about one or two things here. First, for the attendees, if you have any questions, please use the Q&A feature in the Zoom meeting so that we can answer your questions. So you put that there, I will definitely get to it and ask one of our panelists to answer that for you. Now, I'm a small business owner, and we have went through a very tough time with the pandemic. And it's a situation where you went from survival, and now the goal is to thrive, right? Whether you were able to kind of buckle down, you had finances, you were able to get money from the government, pivot, whatever you had to do, now we're at a different space. And the goal really now is, how do you go from being in an issue where you didn't know what was going to happen. You didn't know if you were going to make it to the next week. You didn't know if you were going to make it to payroll. And now, what do you do? How do you thrive? And that's the main thing to try to understand when in this panel today, this panel discussion. And we know that knowledge is extremely important for success. So my first question will go to Adam. Adam, what should employers be concerned about if they are starting to bring employees back to the physical workspace?
Thank you, Bert. So what we've seen, and we've been writing this out with all of our clients, right? So we ourselves are a business, a law firm. We've staffed up. We've got people in offices. And that's how we've been operating our business for the last 50 years. When everything hit back in March, we shut down just like everyone else and tried to, pivot to a full remote environment, which we think we did very successfully, and a lot of our clients did very successfully. So now everyone, but you can't do that if you're a public-facing, entity where you have customers coming in, or a retail organization or a service organization. So what happened? You shut down, like you said, Bert, for a period of time. Now, if you haven't already, businesses are starting to come back, and they're having people in physical spaces. And so what's going on right now is, what do you need to do to make sure that you can thrive successfully? And that has to do with following guidance, right? So the CDC issues some guidance, New York, and I'm talking about New York State in particular. New York State then follows along and says, well, we either adopt or change that guidance slightly. We make it a law. The question is, what can you do to protect your employees? You have an obligation to the public, and you have an obligation to your employees. And for good business reasons, you don't want people out sick. So if you have been closed and you haven't done this sort of reopening, which a lot of businesses started doing as far back as June, you need to really think about it now and do it not in a haphazard way. You want to have policies and procedures in place to have a safe environment. That means written policies and procedures, just like your other types of workplace policies that obligate every employee to not do certain things or to do certain things. And they're adjusted for COVID reasons. The CDC has not said that you can treat the workspace any different if you're vaccinated as opposed to unvaccinated right now. So that's one issue, right? There is all this stuff about how now you don't have to wear a mask in public spaces and certain guidance on that. If you are a business that wants to retain some sort of protection in the workspace, you can have policies about social distancing. You can have policies about wearing a mask. You can have cleaning policies. There are things that you can do within the workspace that protect your employees. And you don't make, as of now, and this guidance could change tomorrow, you don't make an exception for someone who is vaccinated as opposed to unvaccinated. And I'm sure we'll get to the issue of mandatory vaccination soon enough, but that's another issue in the workspace. So and what happens? You have someone, let's say you have a mask mandate in the workspace, and you have an employee who comes in and flouts that rule. If it's a rule, if it's a policy in your private workspace, if you're not a government entity, you can enforce that rule. And what does that mean? It's just like any other policy. If you have a rule in your workspace where you say people can't sit on their cell phones all day and they need to be working, and you write people up for doing that, or you have an attendance policy and people violate that, you write them up and ultimately it could lead to termination. Same issue here, as long as you have that written policy and procedure in place.
Okay, question relating to policies and procedures. Now, the chamber is made up of small business owners, typically not large businesses. We're talking about maybe 20 employees or less. What do you suggest? How do that business owner may not have the expertise or have an HR person in-house? How do they go about formulating these policies and procedures, or what do you suggest?
So you want to speak to experts, right? I mean, you could, as let's say you're a principal, you're an owner of a business and you don't have an HR person on staff, you could spend the time and dedicate the resources to going online and cobbling together certain policies and procedures. I mean, already, regardless of your size, if you have one employee, you have to have those FLSA posters, you have to have the workers' comp posters, you have to have the minimum wage posters. Those should be posted in your workspace. There's no exception to that. And every business, whether they have a six-figure a year salary HR person on staff or not, have those posters in their break room or in an employee location. This is a matter of just extending that and preparing your own policies. My recommendation is to invest a little bit of money into it, and you hire someone, whether it's an outside HR source or us, as we do this. This is something we certainly do, and we'd love to talk to you about it. But if you don't want to get a full law firm involved, there are consulting HR services that do this. There are payroll companies that do this. It's worth the money, in my view, because I've seen this screwed up many times, especially when it comes to litigation. Once you're in the middle of a litigation and the other side likes to say, oh, well, you didn't have the proper policies and procedures in place, it's worth the money right now. It's an investment. It's not a lot of money. By any, even compared to the size of the business, it's not a lot of money to pay someone, whether it's a law firm or an HR service, to prepare a handbook, to prepare those policies the right way, and then you have them, rather than having something that you have some doubt as to whether or not it's complete or even lawful.
Thank you. So it's interesting you talking about, not a lot of money. We know that money is a big deal. And I think that now that companies are going back out there, and I'm talking about thriving, having access to money is really important. If a business owner did not realize how important it is to have access to money as it has been because of the pandemic, I don't know what to tell you. So I got a question for James. James, I've heard about this SBA 504 program for the first time recently. Did not know about it prior to that. I know a lot of the chamber members don't know about it. Can you tell me a little bit about what is that program about?
Sure. So the SBA 504 loan program allows a business owner to be able to access up to 90% financing for the acquisition and or improvement of owner-occupied commercial real estate. So when I say owner-occupied, I mean the business itself is occupying 51% or more of the total square footage amongst other eligibility criteria. But in essence, the way that the program works is it allows a business owner to not only have the long-term stability of ownership by owning their space, but more importantly, be able to access that ability to own the space with only putting 10% of the total project cost down, as opposed to the typical 20, 25, 30, or 35% that you would be required to put down under a typical conventional commercial mortgage, right? So it's not only that you can just acquire the property, but oftentimes when a business is purchasing a property either they locate in currently or are moving to, there's other costs that come along with that, right? So it's, any renovations you want to do, furniture and fixtures or equipment, and all of the eligible ancillary soft costs like your lawyer, your accountant, engineer, architect, mortgage recording tax, all these different things. SBA allows you to lump that all into one, let's call it bucket, amortize it over 25 years, with a fixed rate that's usually below market. So, I mean, the idea is allowing a business to acquire this long-term asset, which will help them grow without breaking the bank. That's in a nutshell what the program is.
Awesome. So how long is the time frame of being approved, getting funded? What does that typically take?
Yep. So great question. It's always one of the ones that people ask the most, right? So typically from receipt of a complete and correct package, takes us about 2 to 3 weeks to underwrite the loan. And then from there, it goes to SBA for approval. So just want to dispel a myth real quick, because oftentimes everyone wonders, about the SBA itself. The SBA does not lend anyone any money. You can't walk into an SBA office and say, hey, I want an SBA loan. They license institutions such as Pursuit to be able to provide the program or administer the programs on their behalf, and they provide a government guarantee. So in essence, that means if you go belly up, the SBA pays us off, right, and guarantees a portion of the loan. Now, to answer the secondary portion of the question, once the loan arrives at SBA for their quote unquote approval, that usually takes about another 10 to 12 business days. So realistically, from start to finish, you're looking at around a 60-day process.
That's pretty swift though. 60 days, that's not bad. And you're talking about 10% compared to up to 35%. That's significant.
Yeah, and picture it like this: you're doing $1 million project, you got to come up with $100,000. That's the simple math.
Got it. Awesome. Are you seeing small business owners? And I don't know if it was just me. Do a lot of people know about your program? This program? How long has it been around? A long time.
So the funny thing is that the 504 program is the best program that you've never heard of, and the reason why is that SBA lending in general is counter-cyclical to the normal economy. So when things are going bad, banks don't want to lend as much. So SBA lending goes up because of the idea of a government guarantee. So the 504 program itself has been around since I don't know, the early 80s. Pursuit as an organization under our former name, New York Business Development Corporation, has been around since 1955. So we actually have been one of the top administrators of the SBA 504 loan program and 7A loan program for pretty much longer than I've been alive. So part of the reason why a lot of times business owners haven't heard about it is that a typical bank, or for the most part, will urge a borrower to go conventional, which requires them to put down significantly more money and doesn't require the bank to call on a community development corporation, which is what we are, as a participant. So, you have to kind of look at it from psychology of if what's better for the bank versus what's better for the customer.
I see. Makes total sense. And again, I just want to remind the participants, if you have any questions, please put it in the Q&A. Probably, I have a question for you. Are there any changes enacted in the recent stimulus package that are advantageous for small businesses?
Yeah, I think the common theme that we're discussing right now is money, right? And money that small businesses quite desperately need. And one of the forms, businesses got that money was through the PPP program, which was part of the CARES Act. But also part of that act was the employee retention credit.
Mm-hmm.
When the CARES Act was written, you could not double dip, in the sense that if you took the PPP money, you could not apply for the ERC. That changed back in December of 2020 when the Consolidated Appropriations Act was passed. This act expanded the PPP program, which allowed businesses to go for a second PPP loan, but also allowed them to apply for the ERC. And what this ERC did is for 2020 allows businesses to get up to $5,000 per employee as a tax credit. Furthermore, in 2021, it gets expanded to allow businesses to get up to $7,000 per quarter per employee. So you can get a maximum of $28,000 in tax credits for an employee in a small business, which again, these are dollars that are, very much needed for a lot of these small businesses. And, that's an opportunity that businesses should be looking into. Obviously, there are many criterias that you have to follow through, and you have to do certain analyses because you cannot dip into the same wages that you use for the PPP forgiveness. So you just have to figure out what is the best way for a business to apply for the forgiveness if you haven't already done so. Because if folks know, PPP allows you to use 60% for the forgiveness in terms of employee wages, and you can use 40% of the expenses through utilities, other professional fees that you might have paid. And there's a whole wide range of expenses that got expanded for that eligibility. So that might make it easier for businesses to have a bigger pool of wages for 2020 that they can tap into for the use of the ERC.
Question for you, because that you explained very clearly. But again, when we talk about small business owners, handling everything that they have to handle on a day-to-day basis, it can be a little bit challenging just with the PPP forgiveness loan now to understand the numbers, to see about the ERC, and then deal with your payroll company relating to that to figure it out. How, what do you suggest small business do? Again, I know that they could contact you, I assume, to help you out. What should we do?
The best thing is to, contact a professional like us, a firm like ours, where you can come to us and we can do that analysis for you. We have the templates, we understand the rules very well, and we can kind of help businesses, guide them through this process. And, the other item that I think most people want to know is, how do they apply for this? We can help them file those amended tax returns, which are basically your 941 payroll tax returns, in order to claim these credits. So that is usually, the best course of action. Even if you have a payroll provider, most payroll providers will give you maybe a platform, but they will not do the application. You still have to do the analysis and, do the number crunching to figure out what you're going to put onto the form when you apply for these credits.
That was a good point, because the payroll companies that I use, they do have a platform to put data into, but you still need to understand what you're doing, and which is very important because it's talking about up to $28,000. That's significant. And when we're talking about thriving now in this post-pandemic time, you would like to have as much money as possible, or and all the opportunities that are available to you, so that you can thrive. We have one question from the participants. Are PPP loans interest-free and forgivable? This is like I guess a bit of an older question, but you can definitely answer it. Also, what if you're a startup and you don't have employees yet? So this is more of a PPP question, but did you catch it there? Are PPP loans interest-free and forgivable? And what if you're a startup and don't have employees yet?
They are forgivable, and then once they're forgiven, there's no interest. But if in an instance the loan doesn't get forgiven, the interest rate is 1%.
And
For a startup, you can apply for compensation that is paid to the officers. Again, that requires an analysis to see what that compensation would be. And you also have to look at when the business was started. There are certain rules. The business was started as part of the CARES Act and as part of the Appropriations Act.
And are they still? Is it still time to retrieve PPP money, the second round? Is it still open?
I believe it expires May 31st. It was.
Yeah.
Yep.
So, but one quick caveat to that is that most large conventional institutions, even though the program ends on the 31st, they're no longer taking applications. The only institutions that are still taking applications until the 31st are community development financial institutions, CDFIs. They're the only ones that are still taking applications.
Awesome, thanks, James. So we talk about these, different questions that you have to answer as a business owner. And something that small business owners, after a while, when they get, the owner may be tired of trying to figure out the numbers and tired of looking at QuickBooks. When should a small business owner consider a CFO or potentially an outsourced CFO?
I feel, that's a decision a business has to make. I think through various stages of, of their business cycle, but considering an outsourced CFO, even when you're a startup, I think is key for future success, because what an individual like that or an organization that provides such services provides is real-time decision making, and that's something that a lot of businesses struggle with because they don't have the right information in a timely manner. And I think that's what a CFO brings to the table, and those services that they provide can include something as basic as bookkeeping to AP, AR, and other, sub-ledger maintenance to, oversight of IT functions, oversight of budgeting and forecasting, looking at, business plans, and also a soundboard for ownership to consider ideas and also think about future plans for the business. So I think, that's something a business has to consider, I think, continuously, whether you're in your infancy stage or you're a much more mature business.
So it's for some organizations, right? And I'm a true believer of, I worked in now Northwell. At the time, it was just Long Island Jewish Hospital, but I worked in a larger organization before I started my business. And what I learned from that is it's important for you to have certain systems in place, certain pieces in place, even if you have to outsource it, even at a small size, because it will help you in growing your business versus trying to handle all of that on your own. So I do agree with potentially, outsourcing some of those financial functions, especially if that's not your expertise. And when we talk about most small business owners in the chamber, the owners typically are wearing a lot of hats. So I think that having an outsourced CFO or part-time person in your office of some sort to handle that function is something that should prove very valuable.
And just to add to that point, as we're talking about the post-COVID world, I think the biggest thing during COVID was a lot of the business owners that are wearing multiple hats were overwhelmed.
Yeah.
With so much going on. And I think having, the right professional on your team definitely helps, through that process. And now in the post-COVID world, there are other challenges that businesses are facing. And again, to have somebody that you can go to and somebody who can provide you the information when you need it to make certain important decisions, that affect your business and, what the business does in the future is key.
So Adam, I have a question for you, and thanks, Prof, for that. He brought up a point, the companies that did well through the pandemic and are doing well now. Adam, what did you see with companies that you may have worked with in the past or during that, those types of companies did well? What are some of the things that they did that put them in a better position compared to other companies?
I'd say the ones that did the best were nimble, right? They were able to, they weren't swallowed up by the changes. They adapted, and they adapted quickly. I work with a lot of tech clients, for example. They immediately realized that they didn't need people in the office, and they allowed people to scatter wherever they wanted to go. I got calls from clients who said, we now have people, we were all based in Manhattan. Now we have people in 14 different states. And believe it or not, they're being more productive than ever before because we're allowing people to work from home. So they embraced it rather than being resistant to it. I had other clients who then felt that it was necessary to have people in the office. But when they did so, it wasn't with a heavy hand. They were doing it in a way that transitioned people back, and they had policies, procedures, and processes in place to bring people back to a safe environment. And we're able to sort of hold to their decision when people would push back and say, well, I'm just not comfortable being in the office. Well, no, this is the job. This is what you're required to do. And they're able to have people in the office or replace them if necessary, if someone chose not to come in. That's a whole other issue as to how flexible you have to be on that. But the big picture is that these companies found it as part of their regular operations to adjust and change and be nimble. And what they did is, as you were just talking about, is they sought the advice of the appropriate outside people if they didn't have inside people. I mean, we fulfill an HR function for some organizations that don't have inside HR. And if it just means picking up a phone call and talking to a lawyer, that's money well spent in their mind because they're making decisions that will save them money in the long run. If they had people inside, on staff who were making these decisions and they would coordinate with us, these were people who were reading everything they could get their hands on, going to webinars about every type of change that was going on so that they knew how to sort of get ahead of it was really the goal.
Did you run into any situations, obviously without naming exact details, that were like fires that you were brought into that during related to the pandemic, that if that organization did this, they may not have had that problem?
Yeah, I mean, the perfect example that I think of, and it actually hit a lot of healthcare clients right away because they were some of the businesses that opened up right away, right? If you're treating people, if you have patients coming in, I think they were allowed to open pretty early. And so there was a lot of the folks who did that and weren't prepared to do it ran into some problems. For example, you remember everything you heard on the news before even before all the politics about it, people were concerned about the disease. And so one particular client they opened pretty early. They didn't have the best plan in place, but they weren't being negligent either. And they had someone on staff who was reacting to every type of symptom that a coworker had. They had someone who came in, remember way back when you would go on the CDC website and there would be a laundry list of symptoms that could be COVID, which was basically every symptom that everyone has every day, right? So they had an employee who came in who was complaining about stomach issues, right? So this coworker immediately turned the office upside down saying, everyone needs to go home. We've been exposed. We don't know if this person has COVID or not. And it really sort of shook the office. And what they learned from that after consulting with me was what we did was we put policies and procedures in place about how to react to employees coming in. And if they have a symptom, obviously they had symptom checkers and people taking temperature and things like that. But at the end of the day, that was a situation where if someone had a symptom, related to something having nothing to do with COVID, they were able to make a very informed decision that this was not a moment that was going to shut down their office and everyone was going to have to get tested. In this case, the employee was someone who had a history of stomach issues, who actually had a chronic condition. So we were able to sort of evaluate and say, no, this is not a COVID incident. And it didn't disrupt the business more than it had to.
So this weekend, I went to the Knicks game, Madison Square Garden. I think it had the most highest attendance since COVID in, I think, any state. And I'm vaccinated, and I was sitting in the vaccinated seats. And there was one area that was for social distancing, non-vaccinated individuals. And it was a very small area. So the entire arena was full of vaccinated individuals. So my question is, can employers give special benefits to vaccinated employees over non-vaccinated employees? And the reason I say that, there was way more seats obviously available, but it seemed like they only left a small amount for the non-vaccinated individuals. How does that work in the workplace?
So what we saw early on was this concept of maybe some sort of vaccination bonus or some sort of benefit, come in and with your proof of vaccination, you're going to get something, a gift card or whatever. That was totally appropriate. There's nothing illegal about that. There's guidance from the EEOC, the Equal Employment Opportunity Commission, that really says employers can mandate vaccination in the workplace in this case. We've been seeing that for years in hospital system, right? During flu season, healthcare workers in many hospital systems are required to be vaccinated. There are exceptions to that. And the exceptions are for health or religious reasons, right? If an employee, but that's like any other type of workplace condition. If an employee comes to you with a doctor's note that says, I have this condition where my doctor is telling me do not get the vaccination, or whatever it is, the employer has to work with that employee through what's known as the interactive process. You don't have to immediately, decide that you will or will not accept that. You have to have a conversation with the employee. In all likelihood, an employee who comes in with a doctor's note that says this employee is not going to get vaccinated for medical reasons is something that the employer has to honor. And then you're going to have to make sure that that person is taking the appropriate precautions in the workplace. So again, you don't have any sort of infection. And what does that mean? If this is an employee who's in a healthcare setting, they're obviously going to be wearing masks when they're patient facing, things like that. So yes, you can do some of that. But what I don't like to see, there's nothing unlawful about it, but I think there are unintended consequences, and it could lead to allegations of unlawful behavior, is if you allow, like the scenario you're talking about, the Knicks game. Okay, we have a special break room for employees that we're going to open up and allow vaccinated employees to use with, free food and vending machines and whatever, or, but everyone else who is unvaccinated has to, eat in their office or what have you. Again, I don't think you're going to see a lawsuit coming out of that, but you may have some sort of collateral effect that's also going to impact morale. The other issue is this mandatory vaccination. If the EEOC says it's fine, you can do it, that's fine. And I have some clients who have gone that route. The problem is, if you want to keep people, what's the alternative? If someone comes to you and says, I'm not getting vaccinated, I don't have I'm not choosing to do it because of a health reason. I don't have a religious objection to it that you have to accommodate. I'm just deciding personally, I don't want to do it. So you as the employer have to make a decision. Okay, if I have this policy in place, I'm going to enforce it. And how do you enforce a vaccination policy for someone who says they don't want to take it? You have to fire them. So you have to balance that. And in this current climate, is it easy or hard to replace someone that you terminate? And by the way, this may be the best worker you have. They just happen to have a view about vaccines that they don't want to take one. So right now, I would say the majority of employers are implementing encouragement policies. We encourage employees to get vaccinated, but they do not mandate it. But again, that's your choice.
A lot of choices, a lot of decisions that have to be made as a business owner, and you have to really look for, get advice or do your research, and then you also have to be a human because your employees, they're human and they work with you and they're team members, and you have to think about their concerns and their issues. So it's a major balancing act. in order to kind of, make the right decision. And it's not simple because things are changing all the time. And that's why we are here today to try to provide some input on the different changes and some knowledge to help our chamber members. So I just
Bert,
want
let me add one thing there,
Sure.
if I may. You raise an interesting point, in terms of dealing with employees as humans, of course, right? So when I'm talking about unintended consequences, about treating people differently because of the vaccine, these are not, protected categories. This is not discrimination. This has to do with policies and health issues. However, oftentimes, because I spend most of my time defending lawsuits, you learn where a lawsuit comes from. It may not be so clear cut as, I'm the employer and I treated someone badly because of, pick a protected category, race, gender, national origin, what have you. Oftentimes employees decide to sue. They get frustrated because they've been slighted in some way, right? It may not be as overt as, a case you hear about on the news. Someone was disrespected. They were treated badly in the workplace. And that by itself may not be actionable, but certainly if that employee is upset and they have nowhere else to turn, oftentimes they will turn to a lawsuit. And so to your point, Bert, keeping the morale good in the workplace is probably your best defense against a lawsuit.
Do you see an increase in lawsuits since the pandemic?
It's been probably about the same. I think it leveled off for a little bit because the courts were closed and plaintiffs' attorneys didn't know what to do with things. And we really thought that we would see a lot of COVID-related lawsuits. We thought we would see, there have been some very famous ones about, nurses suing hospital systems saying they weren't provided with proper PPE. There was one out of Illinois with a very large national retailer where they had employees who had passed away from COVID, and they claimed that the employer did not, have the proper policies, procedures, and protections in place for the employees. But we really have not seen an uptick in those types of lawsuits. We did see an uptick in lawsuits because with the economic, downturn, a lot of people got laid off. And if it wasn't clear why someone was being laid off, like if your whole department wasn't laid off because of economic reasons and employers picked and chose who they wanted to lay off, that's where we start seeing lots of lawsuits.
Okay. All right, just pivoting a little bit, probably, and I asked Adam the same question, as an accountant and your firm being involved with so many different businesses, I want to know, again, outside of definitely being nimble was important. Is there anything you saw from certain businesses where they really failed at that some of our business owners here can kind of think about, where they failed at that put them in a bad position, or something that they did really well that put them in a better position from your exposure to different organizations? Is there anything you could maybe talk about real quickly?
Yeah, I think I'll start with what worked for some businesses, and I think it was really, this theme of reimagining what they did. One example of a business was that they were a wholesale supplier of a particular product to restaurants, and now with restaurants facing what they face, this business pivoted to an online model, which they always had the website. Their e-commerce business was maybe 10% prior to COVID, but they were able to pivot very quickly and push a lot of traffic towards their towards their website. And with folks being at home, a lot of people that were never customers outside of restaurants started ordering this particular product, and their sales went from a 90-10 split going the other way to turning it around where 90% of their business was coming from the e-commerce. And that definitely helped them kind of weather the storm and actually come out on top. One area where I think some businesses struggled was not having the right technology in place, or not having the right cybersecurity infrastructure. And I think the simplest question that businesses can ask themselves in a situation like that is, have they done a risk assessment of what their infrastructure is? It's simply having an IT provider who makes sure your email is working and your printers are working, is definitely not enough. And, we have many examples of that, latest being, what happened with the Colonial Pipeline, so there's security threats, throughout, the technology landscape. So I think that's something that, companies, we saw more examples of than we would have liked to, where they definitely had a lot of deficiencies.
So just adding to that point, I'm a business owner. I have a restaurant. Not even. I have a small insurance firm. What's something immediately I can do to address the cybersecurity issue there?
Something very simple. You can hire an IT consultant or a cybersecurity firm that can come in and just simulate a phishing attack. And it'll be a simulation that goes out to all your employees just to see how many folks are going to click on those links, and that will kind of show you, what the knowledge base of your staff is when it comes to these cyber threats. And I think the next thing would be to, at a minimum level, hold some sort of cyber training that explains to them, what such threats can be, can look like, and, what impact they can have on the organization, whether it's a small business with employees or a bigger one with 500. You have to understand, what that impact can be.
That was a very important point. I think that when you have this ERC credits, certain other funding available to you, and there are some businesses that are flushed a bit with money, right? And the time is now to consider doing the things like you just spoke about, doing the things that have been in the back of your mind, or things that consultants that maybe told you about, but you may have said, oh, I don't have enough money. Is it really worth it? This pandemic has shown it is worth it to be prepared. It is worth it to have a disaster plan. It is worth it to have a risk assessment. It's worth it to do all the things that larger organizations do. And we're in a time and age that it may not be as expensive as everyone thinks because of technology in general. And I think that's something very important that all of the chamber members should be very much aware of. How things were 20 years ago is totally different now in regards to solutions, resources, et cetera. So, I think that was a very important point, being prepared. Again, one of the reasons why my organization did well is because we had a compliance plan that had a disaster plan. And organizations at my company size, many of them don't have it. Companies that are 2 times, 3 times my size, some of them did not have that. And so it's very important for us to make sure we have our infrastructure in place. And I think the time is now to take advantage of all of the, whether it's the credits or any potential additional money you may have. If you receive EIDL money, use that money to plan for the future so that you could be well prepared. So I just want to kind of go back to James. I was thinking as everyone else was talking, and I've been in my space here for 10 years, and I don't want to do another 10 years of paying rent. So, when we're talking about being eligible for this loan, what is the criteria to be eligible, for eligibility for the loan your company provides?
Sure. So for the 504 program, main eligibility, aside from the occupancy of 51% or more, is that the business has to be a for-profit entity, based obviously here in the United States. If the business is owned by a woman, if it's a woman-owned business, minority-owned business, veteran-owned business, or any of these other subcategories, that's beneficial too, but doesn't prohibit eligibility. Basically needs to be for-profit, organized here in the United States, occupy 51% or more of the space, and industry-wise, SBA is very agnostic. The only things that they shy away from are any of like the sin industries. So, a gentleman's club or a or just basically anything. If you wouldn't tell your mother about it, we're not lending to it, right? So that's the way I like to put it. That's the basic eligibility. Now, more importantly than that is that the 90% financing changes in two particular circumstances. So the first of which being if you are what SBA considers a startup, which is 2 years or less in operation, or if the business is located in what's considered a special purpose property. So for each one of those things, that 90% that 90% financing drops by 5%. So if I own a movie theater or a car wash or an ambulatory surgical center, that's considered a special purpose property. So you'd be able to access 85% financing instead of 90. Now, let's say I was a brand new startup movie theater, that 90% is now 80%. So those are just key kind of things that are important to note. And in terms of just outside of that, that's the general eligibility. Now, the other part is what SBA considers a quote small business. So that is actually, for the most part, it's only really defined by the number of employees you have, not the dollars that you make. But there are two key criteria that SBA evaluates. So one of which is that for an average of the last 2 years, the business cannot have more than $5 million in net income after distributions, which is very generous to begin with. And then the second one would be that the business does not have more than $15 million of equity in the company. So if I was to look at your balance sheet and I look at the stockholders' equity, that cannot exceed $15 million, which again is quite generous, right? So those are really the important eligibility criteria. And more importantly than anything else, or not even importantly than anything else, but the last major occupancy or major eligibility issue is if the borrower or the business has caused a loss to the government of some kind. And that is not being behind on taxes or anything like that. That is defaulting on a federal loan. So if you defaulted on a student loan or a Fannie Mae or Freddie Mac mortgage, that's going to be a big problem with SBA.
Does credit scores play into this, or DUNS information, something like, you know?
Yep. Yeah. So there's no way around it. Credit plays into everything, right? So does SBA have a hard and fast drop dead credit score? No. I've had borrowers that have had as low as 630 credit scores and as high as 800. SBA doesn't necessarily care what you did, but what they care so much about is what you did to rectify it. So I not only believe in that professionally, but I believe in that personally too. I've had borrowers that are formerly incarcerated, had bankruptcies, came from every different kind of walk of life. And what matters is whatever the issue is, to just tell us up front. Because number one, we're going to find out. And number two, it helps me as a lender be able to know what I need to do to be able to do my job, which is get you financing.
Awesome. So have you seen any changes in the amount of applications you're doing since the pandemic?
Absolutely, man. It's actually been through the roof. So not just with PPP and EIDL, but 504 and 7A, which are the two main SBA loan programs, are busier than ever. I alone as one on the team am working on like 15 different deals right now. So that's a good thing, though. That's what you want to see. And it goes back to my point earlier that for the most part, a lot of larger institutions, though many of them are our partners, and this is not a dig at them, they're more conservative and they're more worried, right? That's why SBA lending is here, to provide this government guarantee. Even though it's not the SBA's money, they're providing the guarantee. So yeah, it certainly is it's been busier than it's been for a while. And then aside from the first part of the statement, the other item that I wanted to mention before, but now it's probably a better time, is that for this fiscal year for the SBA, which ends on September 30th, any SBA 7A or 504 loan that closes and funds before September 30th, the SBA is making 3 months of P&I payments for you. And it's under the Consolidated Appropriations Act. It's the Section 1112 payments, which it's literally being paid for you. It's not tacked onto the back end. It's not a deferment. They are paying it for you, which can really be, substantial savings.
Wow. Yeah, that's significant. Every business owner who's potentially looking to, get their own property should know about this. I had no idea about it. And there's also the fear as a business owner of you just can't afford it because that down payment on commercial space is usually quite expensive. I think the thing now is this is an incredible opportunity because there's some turnover now, right? There's the businesses who could not make it. And now we have the other businesses who that space is ideal for them. I'm hearing that.
And to that same
Okay.
point, you also have to understand from the landlord side too. If you have a landlord that hasn't been collecting rent in 2 years and has owned the building for 30, many of them are like, you know what, screw it, let me just sell the place and cut my losses and walk away. So there is an influx of available spaces too.
Right. Yeah. So I think that there's definitely opportunity with that. And this alternative lending, you hear alternative, but it's really a good thing. It's actually better than traditional in a sense. You're going to pay 3 months of my bill with a P&I. Well,
I'll take it. Like, yeah, I would say, I wish I had a business to do it with. You know what I mean? Like,
so that is definitely interesting. One more question are you seeing any specific industries that are applying more? Just wondering if there's specific industries that just popped up a little higher than others.
Sure. So as of just specific to the pandemic, a lot more wholesalers, several more manufacturers than normal, and a lot of larger contractors. So, for example, I have a borrower who's one of the larger electrical contractors in the city of New York, and does strictly government work. So they're doing a lot of work on the JFK Airport project, or the LaGuardia project rather, and it was a perfect time for them to buy a warehouse space. So I would say, in terms of industry, wholesalers and contractors, in terms of property type, warehouses are definitely up a lot.
Got it. All right, I have one question for you, James. Obviously, SBA loans are only available to for-profit businesses, but if a not-for-profit set up a for-profit business arm with revenue generating model, would they be eligible for an SBA loan after 2 years in business?
So I love, those are the type of questions that I love. And whoever wrote that question, thank you, because you're obviously very savvy and know what you're looking at. So yes, that does happen. Nonprofits are not eligible. However, if a nonprofit has either an affiliate or subsidiary for-profit model, they would be able to, for-profit entity, they would be able to obtain an SBA loan from inception. They would just be classified as a startup, meaning that particular entity. If they'd been around for 2 years or more, then it would just be the regular 10%, right? But the idea is that we're not lending to the nonprofit. We're lending to the for-profit, which is an affiliate of the nonprofit, which happens to occupy the same space. So yes, in short, you can, as long as it's a for-profit entity.
Okay, awesome.
Great question, though.
A good question. Adam, your area has a lot of activity going on. I was in my office today, and a guy from a company came in my office, and he didn't even have on a mask, which was concerning to me. There's a lot going on about wearing masks, companies handling, do I call this company and speak to his owner and say, why did your guy not have a mask? Is he going to say, well, you should have had a sign on your door? Can you give some thoughts on just that with the general public interacting now? It's a very weird time, but how does businesses handling their rules with the general public coming in? I'm seeing in certain places that in their companies, they don't have on masks, but the general public comes in. What is the story behind that? Can you help me out a little bit?
No, that's right. Look, you get to control your business space as you choose. You're not a government entity or location. I mean, the best analogy I've heard is, restaurants saying no shirt, no shoes, no service. You can have a mask mandate in your workspace. You can have signs on the door that require people to wear them. It's something that you get to do to protect your workspace. I mean, what are you going to do? The delivery guy comes in, he's not wearing a mask. You ask him to leave. If he's going to be polite about it, he'll apologize and put on a mask, or he'll leave. I mean, you don't want to also have confrontation in the workspace either. So that, it's not acceptable. I mean, think about it. You have to break this down piece by piece, right? If, let's say, your receptionist is sitting there and you say, sir, there's a sign on the door, we require everyone to wear a mask, and the guy becomes irate and acts inappropriately, that's not acceptable under any circumstance. That's not a First Amendment right. You don't get to do that. And if he becomes threatening or in any manner, you call the police. You have an obligation to protect your employees, right? I mean, it's not a clean analogy, but the changes to the New York State Human Rights Law and the city administrative code made very clear that if your employees are sexually harassed by people who are not your employees, vendors, contractors, the delivery man who comes in, you have an obligation to deal with that, right? That as an employer, that is your job to protect your employees, and you can be on the hook if you don't do that. So yeah, you have to do two things. You have to decide what's right for your workspace. Mask, no mask, that's up to you. I know a lot of national retailers announced right away after the CDC guidance came out, they said, we're no longer requiring masks in the space. You can have a sign on the door that says, you know, we'd like it, we'd encourage it, that's fine. And so far for the last couple of weeks, that seemed to work. And also we're in a positive environment for the moment where the numbers seem to be coming down. So hopefully this is not an issue. Hopefully we've turned a corner, and hopefully all the sort of on edge feelings are starting to dissipate too. But if you see, you know, case counts start to spike again, I think this is something that employers are going to have to deal with. But you have the right to control that space. You have the right to say people can't enter your space if they're not wearing appropriate attire, whether that's shoes or shirt or a mask.
Thank you. All right. So we're getting close to the end of our panel discussion. I'm going to just have our panelists, and Adam, I'll let you go last since you just went, but I'm going to have our panelists just kind of basically give one or two words, closing words on this whole concept of just reimagining your business. Any, you know, last thoughts on that? So Prableen, I'll go to you first.
Well, thank you once again to the Chamber and Burt for having me today. In closing remarks, what I would like to say is just, you know, have the right professionals on your team, whether they're in-house or you get outside consultants. It's never too late to, you know, seek expert advice. And it's always good to get advice from folks that know your industry, know your business, because timely advice, you know, leads to timely decisions, and they can have a, you know, lasting impact on your business. So as we come out of, you know, the pandemic, I think some of the things that we touched upon, whether it's, you know, all the employer-employee issues, cybersecurity, you know, additional credits that are still out there that can improve cash flows, looking into an outsourced CFO / controller to help you kind of, you know, navigate all the different, you know, challenges that are, you know, still ahead of us. I think those are the things that businesses should be considering, you know, before, you know, they run into similar situations, maybe not caused by a pandemic, but maybe because of, you know, a downturn in the economy. And I think it's always good to be prepared.
Thanks, Prableen.
Yep.
James, before I have you give your final thoughts, I have one question for you. I searched the CDFI locator and it did not find any results that offer PPP to small businesses. Any resources you can recommend?
So you would go to, sure, to answer that real quick, if you go to the SBA.gov site, you'd be able to do it that way. I could tell you off the top of my head that Action East, ACION East, as well as Renaissance Economic Development Corporation, REDC, as well as a company capital, which is formerly the Business Center for New Americans. Those are 3 CDFIs that are all still doing PPP loans, and I know that because I've referred several people to them. And I'm assuming you're based in New York, so I'm hoping that you're looking somewhere in New York. But yeah, that's what I would do.
Okay, thank you. And any quick last words about reimagining your business?
Sure. So in terms of reimagining, I would say 2 really key things, similar to what was just said, that taking this time of what happened in the pandemic and looking at what you didn't handle so well and putting plans in place to make sure that that doesn't happen again, whether it's a pandemic, natural disaster, or something other than that. And number 2, using this time to really look at what parts of your business did well in the pandemic and which parts you really had the most trouble with, and figuring out a plan how to augment the parts that you had trouble with. And lastly, be proud of yourself if you made it through here. If you made it to this, you can make it to just about anything. So
I totally agree with you. You definitely should be proud if you're still in business at this point now. And Adam, any quick comments on that as we close out?
Sure. Thank you, Burt. And just want to thank you and thank the Chamber, of course, for having me today, and the other panelists for being part of this. I would say figure out what is the core purpose of your business. If, what is going to make your business run the best way possible? And does that mean you need people physically present, or can you be flexible and have people be remote, have them do whatever they want? And then just be consistent with what that is. If the business requires you to have people physically present, have the right protections, policies, procedures, everything in place, and be consistent and treat people the same way. Because I will tell you, more often than not, when I get a discrimination lawsuit, it's, this person or that person was treated better or worse than I as the employee making the complaint. So to avoid those issues, you want to make sure you're consistent across the board.
Thank you, Adam. And I'll just close off by saying, it was a pleasure to moderate this meeting. It is extremely important as a small business owner for you to grab as much information as possible. Pay attention, stay close to the chamber. They are always putting out different information, different webinars, and reach out to consultants and any resource you may have to help you along the way, because now the time it's time to get busy. It's time to make the money that your company needs to make, and look forward to the future. So on behalf of the Chamber of Commerce, I would like to thank every one of you for being a part of this, all of the panelists, Tom, Gretch, and Jeff, and thank you very much. And everyone, enjoy your day. Thank you.
Thanks, guys. Thank you.
Sure. Thank you.
Thanks, guys.